a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Well, the recent stock market volatility is also impacting ETFs and ETNs. And for the latest on that, we brought in our research director of ETFs, Nina Mishra, who's going to fill us in on not only the big picture, but some things specifically going on with
products.
One product or two, yeah.
So the market, was unusually calm over the past few years, which made shorting the volatility or the volatility index, popularly called the VIX, or also known as the market's fear index. So shorting VIX was one of the very popular trades on the market over the past few years. In fact, bets against volatility had more than doubled in 2017. But the trend, reversed this year. Volatility was back. And on Monday, this VIX index soared more than 100%, and which sent inverse VIX products, two in particular, one by ProShares and the other one by Credit Suisse. These products plunged more than 90% because of this spike in VIX index. And one of these products was an exchange-traded note, the one by Credit Suisse. Because of the plunge in the value of this product, Credit Suisse next day announced that it is liquidating their ETN. So on the next chart, I just wanted to show the collapse of these two ETFs, how they were almost killed that day with the spike in volatility.
Okay.
On this slide, I have some more details about this product, the ETN. It is issued by Credit Suisse. It's called Velocity Shares Daily Inverse VIX Short-Term ETN with the ticker XIV. Okay. It provides inverse exposure to short-term VIX futures. Now, that is important to understand because it is short. It shorts volatility. So when volatility spikes, and it has to cover its short position because it is in losses. So to cover its short position, it has to basically buy back the product that it initially sold. So that's what happened on Monday because the value of these products, this product also plunged. So it had to buy back a lot of VIX futures, which it was shorting initially. And that further exacerbated the spike in volatility.
Well, it can get complicated, can't it?
Yes. Now, if you want to take a detailed look into this product, you should go to our website, the quote page of XIV, and you can also go to the sponsors page using this link. And you can look at the details over here. It basically holds CBOE short-term VIX futures, 2 months, February and March. So it holds short-term VIX futures, and VIX futures are normally in contango. Contango means that later dated contracts are more expensive than the near dated contracts. So when it rolls over the contracts, it basically sells more expensive contracts and buys cheaper contracts. So that means this product benefited over the last few years because of contango and also because of decline in market volatility. That is why it was up more than 175% in 2017. Now, this contango structure is important to understand because this also means the products which are on the other side of the trade, which are long volatility, they suffer due to contango because they buy more expensive contracts and sell cheaper contracts at the time of rolling over. So this results in decay in value for long volatility products which investors should understand if they want to invest in this product.
Yeah.
Now,
futures are complicated enough.
Yes.
Then you add this layer in, and really you have to really get your head around this.
And further, this is an ETN, exchange traded note.
Yeah.
And you know, we have discussed exchange traded notes in the past, so I'm not going to discuss a lot in this video. But they are a totally different structure.
Right.
They are unsecured debt instruments issued by normally a bank. Now, on the slide, I wanted to highlight some of the risks of these complicated products because most ETFs which track some well-defined benchmarks and disclose their holdings regularly, they are very transparent, straightforward products. For investors, they are easy to understand, and they are very good to get exposure to the market or a particular segment of the market. But these products, inverse and leverage and exchange traded notes, they are very complex, very difficult to understand products. So I think only sophisticated investors and traders should use these products. So after the collapse of these products, BlackRock, which is the world's largest asset manager and the biggest issuer of ETFs, they issued a statement, and I thought it was important. They said, the statement said, inverse and leverage exchange traded products are not ETFs, and they don't perform like ETFs under stress.
That's important to know.
That was very important, I thought. So these products use derivatives to achieve their goals on a daily basis. They are suitable only for very short-term holding and should be used only for hedging or short-term trading only. Now, exchange-traded notes, as I mentioned, they are more difficult, more complex products because they do not hold anything, and also because they are unsecured debt instruments, so they bear the credit risk of the issuer. And in the past, during financial crisis, in fact, investors lost a lot of value because of collapse of those ETNs. ETN structure also has call risk, which means that the issuer can issue a call notice for the product. In this particular case, they could call if the value of the product fell to less than 20% from the previous day's closing value. That is why they triggered the call notice. Now, I have taken this from the website of Credit Suisse, the one which I mentioned earlier, XIV. I have taken this from this website. If you go to their FAQs, you will find these statements. I mean, they warned the investors,
sure,
but it was somewhere hidden, either in the prospectus or some other document. And most investors do not read all those documents, but they should at least read whatever maybe is available on our website. We write a lot of articles, do our videos. So Credit Suisse said about these ETNs, these are daily trading tools for sophisticated investors to manage daily trading risk. See the word daily.
Yeah, right. Not long term.
Yeah. Then investors should actively and frequently monitor these products, even intraday. So you cannot buy and forget about them. You need to keep on monitoring these products. So probably they are suitable only for traders who are looking at the market all day and trading. And the third statement, which was in the prospectus of this product, is most important, I think. They clearly stated the long-term expected value of your ETNs is 0. So if you buy and hold for a long term, and because of all the risks that I mentioned, covering when volatility spikes, or in case of contango or backwardation in the futures structure, if you buy and forget, you may lose all your money.
All right. So I have to ask, do you own either of these products that you spoke of specifically?
No, I do not. I would not buy, and I would not recommend this product to almost all retail investors, professional investors, traders can buy and trade in these products.
Yeah, that's important because you know about this.
Yeah.
You know the nuances, and if you don't even want to get involved with it, maybe the average investor needs to take a second look.
Yes.
All right.
Yeah, I think this event was very important in terms of learning that you should know what you invest in.
Sure. All right. Thanks for that. Don't forget more ETF information on our website, Zacks.com. All you need to do to access it is use the Funds tab in the top toolbar, and that will prompt you to click on another link to the ETF section of our website. With Nina, I'm Terry Ruffalo.